Hi, welcome to the Market Alert for Tuesday, 15th of January 2018. So today is D-Day for May, and we will see what impact this is going to have on the pound. But according to Sky News this morning, Brexit deal vote day, May facing huge defeat and vote of no confidence in the government. And would bet that is going to be the case. You're better off staying with the current arrangement than the deal that she has so-called negotiated over 2 years. But that's a separate issue. What we're looking at here is the impact it's going to have on the pound. We'll look at the daily chart. So we can see yesterday when she was spouting about that she didn't see us leaving Europe. Bizarre comment, I have to say. Create all sorts of unrest if this doesn't go through in one way, shape, form or another. But like I say, that's more of a political thing. It's more of what happens financially that I'm concerned about. And yesterday the market moving higher, there was a bit of selling around, and if she gets a no vote, then we're going to see this sell off without a doubt. And then it depends what happens, whether Labour call a motion of a vote of no confidence, and then we head towards a general election or whatever. But we'll just have to wait and see, one step at a time. And the vote, by the way, according to Forex Factory, is at 3 p.m. I thought it was going to be later than this. And the forecast here is also to reject this as well. So it'll be interesting to see whether that's the announcement or whether that's the time they start actually voting. I don't know. Other news today, whilst we're here, PPI for the US, and also Super Mario's out today. He's speaking at 3 p.m. as well, coincidentally as well. So it'll be interesting to see what he's got to say at the time that we should see this announcement. So yesterday the market it started off towards the downside. The issue here, of course, is the market was already above the 200 bar moving average, and then once it got back above the others, this was used as support, as was the close of Friday, and the market moved sharply higher. But then prices coming off the highs and just sideways at the moment. So it's going to be interesting to see how this pans out. This is going to remain sideways until this afternoon. Meanwhile, in the Dow, this making progress to the upside. So the selling pressure that we've seen in this market over Thursday and Friday of last week has been absorbed, and prices moving back towards the upside, towards the 24.063, just around that now at the moment, 2 points off, 24.211. If prices are to continue to move higher here, watch the 50 bar moving average, and the 200 is in the way here as well. Yesterday you can see how the market drove through the 200 bar moving average. A bit of selling to begin with at 230, 235. The market reversed, moved higher, and then got into a bit of a range sideways to higher there, staying above the averages until we got to here, where we saw the market come back below the 50 bar and then moved higher, creating slightly more than a double top there, but then coming back towards the close, and a bit of activity here. However, overnight prices continue to move higher. You can see there is a 150 point rise so far in this market overnight. A bit more than that actually, nearly 200 point rise in the Dow. A bit of selling and profit taking here though, but the market remaining above the R1. Watch for the R2, which is here at 24.110. And as the market gets up to these levels, as you've seen before, the less chance the market's got of moving higher. So it may be one of these classic cases of the moving the market higher, ready for the no vote or vote of no confidence and everything else that's going to hit the fan before this market moves lower, and then they can get away with backing it up with Brexit was the issue. And the reason why we've got the global slowdown and everything else, it would be blamed for a whole host of things. Take it from me, if we start to see recessionary pressures, which we are globally. House prices down 20% in Australia. Canadians more debt than they've ever had. I mean, you have to do the research and look for it, and you will find it. But it's not reported in the mainstream because, and I understand why actually, because it does become a bit of a self-fulfilling prophecy that people stop spending, which accelerates a recession, especially when you've got a debt-based economy where people have to spend and borrow money and get into debt in order to keep the economy going. It's the most bizarre structure that you've ever seen. We've gone from financial cycles, or business cycles as they were, to credit cycles since the 80s, where it's become easy to borrow money. So yeah, an interesting time that we really do live in. And then finally with Bitcoin, this higher yesterday, you can see prices moving back up to the 76%, 37.01. And this may be due in part to this. Russia plans to tackle US sanctions with Bitcoin. This was in the Telegraph yesterday. And more details of that if you wish to read it. But also the interesting part in this, if you don't, is that the bolster countries' reserves with Bitcoin could start as soon as February. So are we seeing the lows in Bitcoin as Russia intends to buy $10 billion worth? This is, as it says here, the Russian government is about to start diversifying its financial reserves into Bitcoin since Russia forced by US sanctions to dump treasury bonds and take back the US dollar, said Mr. Yinko. Said these sanctions and the will to adopt modern financial technologies lead Russia to the way of investing its reserves into Bitcoin. It said there's nothing official yet, but it lags 6 months, as it says here, as they release this information. So we'll see, but an interesting article that was reported by the mainstream newspapers yesterday. I know that they've dropped all of their US bonds, and if you want to read more about the full details and the impact it had on the markets, then you can see this on Zero Hedge. Russia prepares to buy 10 billion in Bitcoin to evade US sanctions. Okay, that will do it for this one. Let's see what happens at 3 p.m. My advice would be to stay out of the pound, just in case by any sort of miracle it gets through. Then you'll see the pound rocket, and if it, and then of course it will sink when they realise what's happened and how bad the deal is. But that will be the initial reaction. And conversely, if it doesn't get it through, then the pound's going to move to the downside and then bounce back. Okay, that will do it for this one. If there's anything else to report, I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.